Good morning, ladies and gentlemen. Again, a very warm welcome to you on Business Today Television. We are at the cusp of a fresh record high as far as the Nifty is concerned, 26,130 for you. Today's gains, despite the Sensex weekly expiry, stand at about 80 points. Strength coming in the IT space, 132 points higher, mainly account of goodwill that's seeping in from Wall Street. Nvidia earnings were on top form. As far as our markets are concerned, two-wheelers are doing well. Hero Motors again at a cusp of a fresh record high. The counters traded about 423 crores worth of shares, the top traded on NSE. iShare is doing well. In terms of other gains, you have metals and some financial companies in good shape. To discuss this and a lot more, whether we are headed for a record high or not, we are now joined by Mr. Gaurav Dua, Chief Investment Officer at Standard Chartered Securities. Mr. Dua is a regular on our shows and has recently moved to Standard Chartered Securities in May 2025. Before that, for 20 years, 2 decades, he was with sharekhan.com. Namaste Gaurav ji, a very warm welcome. Good tidings coming in from the markets. Are we readying ourselves for a record high?
So yes, I mean, if you look, the worst of the news came in August when we were slapped by a 25% penalty in terms of the import duty, and the incremental news flow post that has been positive both in terms of the India-US ties and also in terms of the policy measures taken to stimulate the economy. We had the GST overhaul. We are looking at 100 basis point cut in the interest rate and also in the CRR. So all this basically adds up to stimulating the economy, and we have already started seeing this impact of that in terms of the demand uptick.
Okay, fair point. We've had a very strong November, a strong rally in PSU banks, private sector banking. The entire financial services space has made the bank Nifty and the Nifty walk towards fresh record highs. Gaurav ji, in your estimate, what are the sectors where fresh strength is expected over the next 2 or 3 months? Largely, it's been a large cap show so far over the last 2 months. Do you think mids and smalls will participate?
So yes, in terms of the sectors, we believe that financial and the consumer stocks, both of them have macro support in place. These are the two spaces which has actually underperformed the other spaces, and they could lead the next leg of the rally. In terms of the market breadth, what we have seen that large caps have done better than mid and small caps. However, we see that leadership of the large caps could continue for some more time. The earning revival in large cap is likely to be better as compared to small cap, micro cap stocks, where I think it's time and we need to be very, very selective there. So we have our bias towards the large cap and some mid caps.
Okay. In terms of overall distribution of fresh money coming into the markets, Gaurav ji, what is your advice to clients of Standard Chartered Securities? How are ultra HNIs at your stable looking at the market? Where are they deploying fresh funds?
So we always advise to have a balanced approach. We do not, or we try to avoid a skewed approach either towards a stock or a market breadth or sectoral allocation. We believe that there are good stocks available across the market breadth and the sector. Of course, we are overweight on the financials and the and the consumption space. We believe IT, which has been an underperformer and which have picked up in last few months, could be outperformer in this short term or over a year also. Metals is one structural story that we believe could play out over number of years. So these are some of the spaces where we are advising our clients to be overweight. And some of the other spaces which have done pretty well, especially the this infrastructure space in last few years. That's where this I think we are underweight.
Why would you prefer metals to this extent? It's a commodity play, nothing much is expected there. What is the logic behind being so bullish in the metals environment in India?
So, a lot of investments are going in the EV space, renewable space, where the demand for metal is much higher, and some of the non-ferrous metal side, the supply side is not growing in line with the demand, and this gradual gap between supply and demand will keep the metal prices pretty strong, and this is going to be a very very positive for the this metal stock. So at one side, because of the climate and the environment concern, some of the supply side is getting constrained, especially in this thing China, and other side the demand has been strong. So that's why we are very positive on this space.
Okay. What is the preference within the metal space? Are you looking at deep value PSU stocks, or do private sector metal giants, whether they're in aluminium space or ferrous space? What is the preference there in terms of hierarchy?
So I think we are looking at the non-ferrous side of plays. There are number of them. I can't really go into stock specific, but another way to play this metal multi-year metal upcycle is probably, as a small investor, you can go and buy a metal-based ETF. There are some available in the market.
Okay, fair point. That's very well explained. What is it that you're not touching with a barge pole? What doesn't look good to you?
So, it's not that we are not looking at, some of these sectors, but we believe that there is some overheating on the real estate side. We are very careful on some of the pharmaceutical names which we believe that are looking overpriced. Then some of the new age stocks, I think, have run basically ahead of the fundamentals, at least in the short term.
Yes, that's a basket that's a bit of a pain as far as valuations are concerned, and it's increasingly become very difficult to keep on justifying triple digit PE where on a net profit basis you're making a loss. Fair point. That's very well put. So metals on the long side, and a bit of a discomfort with valuations on the internet space locally. A view on cement, Gaurav ji?
So cement is a space which I think you need to be selective, though you will start seeing price hikes in the second half, and that could provide some sentimentally positive impact on the space. But yeah, I think that's a space which again is not cheap, and you need to be extremely selective there.
Gaurav ji, it's almost now clear who are the winners of this GST rate cut that happened in the market in September of 2025. 5. Within the auto space, what is it that you prefer, and how do you see this rate cut panning out
So you
for
know
the
what
broader economy?
this GST overhaul has done is that it has revived demand for the entry level goods. So what we were seeing from 2022 to 25 was that there was a very strong growth in the luxury and the premium side across the consumer segments, especially in auto, where we were seeing very healthy demand for SUVs and the larger cars, the more expensive bikes. But with this GST overhaul, the entry level bikes or the entry level goods have started seeing a very sharp uptick in the demand, and some of these stocks which have a larger exposure to the entry level segments, you would see that they have been outperforming. And we believe that this kind of trend will go on because some of these entry level larger exposed companies have been underperformers, and now they are catching up with the other stocks in the sector.
Fair point. A view that you would want to discuss on the capital goods space, Gauravji, this was the market darling about 2.5 years ago, but absolutely quiet to negative. Look at Thermax. We have seen prices of 5,000 rupees, but now at 29.71. Look at ABB, Siemens. Yes, they've had a great rally, but is there value buying possible? How are you looking at the capital goods space?
So, if you look at the overall macro environment, what we had seen was that the economy was supported to a large extent in the last few years by the increasing spending by the government on infrastructure, on the capex. Now, what we have seen that the micro environment, the priorities on the policy side have tilted towards stimulating the consumer demand in the economy. So you are seeing some profit booking on the investment-led stocks, which have been outperformers, and most of these spaces had become, valuations weren't this thing comfortable anymore. So this adjustment is taking place in the market. What will this do is that over 6 months or a 1 year period, you will start seeing some of these stocks in this space look very attractive. So that will be the time to buy these stocks. Second, within this large space, where we see value still is the power transmission space, where I think power equipment is where a lot of new government spending tendering is in this thing pipeline, and a lot of companies which have got orders will show a very handsome scale up in the execution. So that's a space within the cap good space where we still find value.
Okay, how about the PSU segment? We've had a very sharp run up on the banking space. Metals is something that you've pointed out. What's the broader theme that you think is underlying the PSU segment, and anything that catches your attention for the long term on the long side?
So, in that space, oil marketing companies have in quarter 2 shown an extremely healthy improvement in the gross refining margins, and that I think is a very good trade for next few months. That is a shorter term technical call, but on a structural basis, we believe that worst of the margin pressure which had come on the public sector banks because of the interest rate cuts is now largely done. From the second half of this year, we'll start seeing improvement in the margins for the bank, and the valuations have also already started to look up. Moreover, the slowdown in the advances growth is already also in factored in valuation of these stocks, which have underperformed for last almost a year. So with valuation comfort, margins started to look up, basically expected to look up from here, and the core advances growth
Hmm.
likely to also show some uptick. I think public sector banks still, look very attractive to us over a couple of years basis.
Okay, I think that's very well explained. And despite the rise that we see in many PSU stocks, chiefly the top four, the PE on them as also price to book remains very, very reasonable. Their dividend yields are also very strong. So, probably a multi year run up is what Gaurav is expecting. Anything you prefer on the pharma space? Domestic companies, US exporters, CDMO players. What's the view in the pharma space?
So there, we are playing the healthcare more from the hospital side, diagnostic company side. That's where we believe the certainty in growth is much the same better. Valuations, though in some of the stocks are slightly stretched, but still we believe that there is value there. So within healthcare, that is our preferred space. Now, in the formulation or the pharma space, I think it's very stock specific now.
Okay, okay. Fair point. That's very well explained. Within the private banking setup, what looks good amongst the top four, or are you preferring PSU banks over private banks?
So we were, tilted towards the private bank compared to these public sector banks. However, recently we have reduced some exposure to the private sector banks and added some exposure to the public sector banks. But overall, we remain this positive on the private banking space.
Okay, so that's the broad breadth of the market we've discussed, except for the most vital sector, which is IT. Software hasn't been one of the top plays either on the long side, but has attracted a lot of short sellers because of problems with artificial intelligence, lack of guidance, so many other issues, including tepid earnings. Gaurav, what is the house view on the Indian software exporters at Stanchart Securities?
We are like this equal weight on IT now. And if you see within IT, the some of the niche mid cap companies have been doing pretty well. Despite the global uncertainties, they have shown an extremely strong growth, and they are being this thing rewarded by the market. So that is where is our tilt, and we believe that some of these mid cap names still calls for investment even at this price. And overall, we believe that IT, which has been a this thing laggard for a long time, will now start performing in line with the markets, especially if you see the macro environment. This start of the new interest rate cut cycle in US. Normally, if you look back, the Indian IT companies tend to perform better when the interest rate are going down in US, because that gives some indication that the government is trying to stimulate the economy in US, and that of course is the good news for IT. Apart from this, if the euphoria towards the AI driven stocks cools down a bit, we have seen that Indian IT companies somewhere are also seen as a anti-AI euphoria basically trade, and that I think would support some distinct buying interest in IT. Lastly, last month we have seen that after a long time, domestic institutions have started building up positions again in IT. They have been on the selling side for a long time, and we have seen some this reversal in trend there.
Fair point. That's a very nice broader structure of the market as you see it at a shade below its record high, Gaurav. Thank you so much for joining us. Here's wishing you all the best for this fresh innings, and here's hoping that we see better highs and higher records in the coming months as far as the Nifty is concerned. Have a nice day.
Thank you so much, Shailen. All the best.
This, ladies and gentlemen, was Mr. Gaurav Dua, Chief Investment Officer at Stanchart Securities. Please continue watching Business Today Television. There are a lot of interesting data that's coming on the other side of this break.
Markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the